Hello everyone, Charlie Rohr here, Director of Operations with American Retirement Advisors, filling in for Joe Vitale, who is out this week, to bring you the Gradient Investments weekly talking points for the week ending 4/19. This week in stocks, major indices around the world rose last week, the fourth consecutive week that the key U.S. indices recorded gains. The S&P 500 increased 1.39%, the Nasdaq added 1.10%, and the Russell 2000 rose 0.86%. Overseas, the international developed markets, the IFA, gained 1.67%, as the emerging markets increased 1.41%. The best performing sectors in the US were utilities and materials, while communication services and energy were the laggards. In fixed income, bond prices rose and yields fell, with the 10-year Treasury down 8 basis points to 1.59%. Rates fell despite higher than expected inflation, likely due to overseas bond investors seeking a safer haven. Also, the Federal Reserve Vice Chair stated that the Fed will be looking through wage and price increases and productivity numbers before determining its next steps. His inflation expectations index is still below the Fed's 2% long-term goal. In commodities, oil prices rose following a report from the Energy Information Administration that U.S. crude inventories fell by 5.9 million barrels for the week ended April 9. This was a much greater decline than the consensus forecast for a decline of 2.9 million barrels for crude stocks, raising prices. The price of West Texas crude rose 6.52% for the week to about $63 per barrel. In economic data, retail sales for March climbed 9.8% from February and rose 27.7% on a year-over-year basis. That was ahead of the 6% monthly rate the consensus had expected, as spending was boosted by the latest round of government stimulus. The report showed a reversal from February, when retail sales fell 2.7%, worse than expected. Excluding gasoline and auto sales, retail sales were up about 8.2% last month, led by sporting goods, apparel, and food service. The retail sales data come at the same time as upbeat news on the unemployment front. Initial jobless claims decreased 193,000 to 576,000 in the latest week. The Consumer Price Index, the CPI, rose 0.6% in March, or 2.6% on an annual basis, for the highest rate in 30 months. After excluding volatile food and energy, core inflation was up 1.6% for the last 12 months. Prices for imported goods climbed 6.9% over the past 12 months, for the fastest pace in 11 years. Fuel was also a major driver of the higher import prices. Prices minus fuel rose 3.8% over the past year. Looking at some specific companies, Costco Wholesale Corporation, Costco, a contrarian choice and a core select holding, increased its quarterly dividend by 12.8%. So yield on the new rate is 0.85%, and shares rose just over 2% for the week. LCI Industries, which is a G33 holding, pre-announced revenue growth of 50%, exceeding the analyst expectations due to a very strong year in the recreational vehicle industry and outdoor recreation space. So their shares rose about 5.8% for the week. And then Procter & Gamble, a G50 holding, announced a 10% dividend hike. P&G has raised its dividend for 65 straight years and has paid a dividend for the past 131 consecutive years. The yield on the new rate is 2.54%, and shares rose 0.6% for the week. The United Health Group, which is a core select holding, reported a revenue and earnings that were ahead of expectation and raised earnings guidance for the full year. Their shares rose 3.9% for the week as well. We hope you're doing well, and we're thankful to have you a part of our family here. God bless, and of course, if you have any questions, do feel free to give us a call at 855-756-5700, or of course our website. You can visit us at aradvisorsinc.com. Hope you have a great week, and we'll see you in the next video.